In the current market sell-off, Warren Buffett just declared Facebook an exceptional corporation, but ruled out buying its stock. Let's take a look at why and the top 2 Buffett stocks to buy. Welcome to Financial Market TV. If you're new to the channel and enjoy content like this, hit that subscribe button and the notification bell. Also, please don't hesitate to share your comments down below and give this video a like. Let's get started. Facebook, now known as Meta, has been hailed as a terrific company by Warren Buffett on numerous occasions. Despite this, the well-known investor and CEO of Berkshire Hathaway has essentially said no to buying the company's stock. To quote him, "We've always known that the dream business is the one that takes very little capital and grows a lot." During Berkshire's annual meeting last year, Buffett noted, "Apple and Google and Microsoft and Facebook are terrific examples of that." During a CNBC interview in 2012, Buffett described Meta, which owns WhatsApp and Instagram, as an amazing firm. "The most difficult companies to assess," he said, "are the most difficult to value." And he was too uncertain about how Meta would fare over the next 5 or 10 years to put money into it. "It's much easier for me to figure out what Coca-Cola is worth than Google or Facebook," Buffett said. "I'm not saying they have anything but brilliant futures, but I just don't know." Buffett famously tries to operate within his circle of competence, only investing when he has deep knowledge of a business and its industry. In 2012, he was asked if he would acquire a big share of Facebook if Mark Zuckerberg, Meta's CEO and co-founder, described the company's operations to him in detail. "Probably not," Buffett replied. "I just don't understand it well enough." Over the years, the CEO of Berkshire Hathaway and his business partner, Charlie Munger, have expressed worries about Facebook. Buffett expressed concern about the platform's influence on the 2016 presidential election in the United States, as well as the possibility of it being used to stifle voting. Munger also criticized politicians' use of social media in a similar way, calling them flogging angry idiots to the polls. "I don't invest in what I don't understand, and I don't want to understand Facebook," Munger said in a CNN interview in 2012. "I don't want people putting all this personal stuff into a permanent record when they are 15 years of age," he continued. "I think it's counterproductive. I basically just don't like it." Now let's talk about the top 2 Buffett stocks to buy in the current market sell-off. In part by buying shares at periods when they are trading at a discount to their intrinsic values, Warren Buffett has generated a fortune for Berkshire Hathaway stockholders by investing in financially stable companies with strong competitive advantages. Following in Buffett's footsteps will have a huge impact on retail investors, especially during the current market sell-off. Many high-quality stocks have suffered as a result of the sluggish investor attitude, and many of Warren Buffett's picks have also been harmed. The underlying case for retail investors is stronger for some Buffett stocks more than others. Amid light of this, there are several reasons why individual investors might consider buying Verizon Communications and RH Holdings in the present market downturn. Verizon Communications. Verizon now has a PE ratio of approximately 10, which is much lower than the industry's average multiple of 18. When we consider that the company based a very strong dividend yield of 4.81%, it appears to be grossly undervalued. It's also worth noting that the company's current payout ratio is only 47.65%, signaling that the dividends will be safe and long-term. The rapid deployment of 5G in the US is a good bet for Verizon. The C-band 5G network, radio airwaves operating in the mid-band spectrum frequency, was launched on January 19 and is expected to result in more data consumption at higher speeds. This is a step up from the company's 5G low-band spectrum frequency network, which has decent coverage but slower speeds. Additional 100 million people in over 1,700 cities in the U.S. are now connected to Verizon's 5G ultra-wideband network, delivered on high-band spectrum frequency, which now also includes C-band 5G. To increase its 5G membership in both the consumer and business divisions, the corporation has been offering appealing subscription options and incentives. Verizon's broadband network, in addition to wireless mobility, is rapidly expanding its coverage. The company's fixed wireless solutions has reached over 20 million households in the US by the end of fiscal 2021, ended December 31, 2021. Verizon's fiscal 2021 revenues increased by 4.1% year over year to $133.6 billion, while adjusted earnings per share increased by 23.7% to $5.32. By 2027, the worldwide 5G smartphone market is estimated to reach 14,942.6 billion units, up from 18.7 billion in 2019. With only one-third of Verizon's customers using 5G-enabled phones at the end of fiscal 2021, the company's ability to profit from the device upgrade cycle in the following months remains considerable. An attractive buy for some investors might be the high-yielding telecom behemoth for all of these reasons, especially at its current discount. RH Holdings. RH, formerly known as Restoration Hardware, is leading North American luxury furniture company whose stock is currently down more than 45% from its 52-week high of $744.56 achieved on August 12. Despite the current market sell-off, the company's profit margins are among the highest in the furniture industry, so this downturn appears exaggerated. Revenues increased 19% year over year to $1 billion in the third quarter ended 31st of October 2021, while GAAP net income increased 297% to $184 million. At the end of the third quarter, the corporation had $2.2 billion in cash on its books. The $2 billion debt financing completed in October 2021 accounted for a significant portion of these monies. This loan, on the other hand, does not mature until October 2028 and has a low interest rate of only 3%. Considering that the company encountered substantial supply chain issues that hindered the introduction of the new RH Contemporary line, multiple store openings, and the launch of a mailing catalog in the third quarter, RH's financial results look rather excellent. For fiscal 2021, RH also raised the lower end of its sales and adjusted operating margin estimates. From the third quarter of this year until 2022, RH is predicted to make a profit from the debut of a new line, the opening of new stores, and expanded marketing initiatives. In addition to the $170 billion home furnishing businesses, the company is looking to grow into other markets such as the $200 billion hotel market and the $1.7 trillion housing market in North America. Finally, the organizations have been attempting to establish a presence in a number of European regions as well. The new RH ecosystem is estimated to have a market size of $7 trillion to $10 trillion in the US alone. This is a big opportunity for the corporation, since even a 1% share of the worldwide market will generate a revenue of $70 billion to $100 billion. This Buffett stock could be a good long-term investment for ordinary investors, given the company's strong brand, loyal and reasonably wealthy client base, and large target market. Thanks for watching the whole video. Again, if you're new and like this type of content, subscribe to our channel. And don't forget to leave a comment down below and hit that like button. Also, click on the notification bell to get updated on our weekly uploads. See you in the next video!